The US markets ended in the green. Most of Asia is in the green as well.
Generally, if you see, the stock prices are determined by so many other factors and do not necessarily reflect the fundamentals of a company.
But if you look at the consumer-facing businesses for Reliance Jio, the EBITDA could rise by 4% quarter-on-quarter.
Again, the condition is that the Nifty Bank should not break the low that we saw recently, which is 45,430. That's a low that we saw, intraday low that we saw yesterday.
So in terms of return ratios, ROA is the best in last 17 quarters, coming in at 1.93%.
We are not seeing a very high uptick in the export volume.
Okay, well, let's get to the market opening now. Here's the first tick on the index. Looking pretty good, actually, for the market.
I think this is a sector where going forward, we're not expecting any kind of a large growth next year.
I think nobody covers the spiritual destinations in India as we do.
But as far as cost of funds for banks is concerned, the pressure is not easing.
On a year-on-year basis, corporates have grown north of 30%.
And it's a good trading session after 3 days of losses. The markets are holding up smartly.
For now, private sector banks are slated to remain open on the 22nd of January.
Well, wee bit of fall from the top is what we are seeing right now.
Well, that's the day so far. You're with us here on another edition of Closing Bell, the last Closing Bell for this week. And, it's a day after a 600-point fall over the prior two trading sessions. So we have a bounce on our hands. You're with us here on, as I said, Closing Bell. We're coming to you from the CNBC-TV18 Motilal studios. I'm Prashant. With me are my colleagues Reema and Surabhi here in the studios. Guys, hi. Good afternoon. And, of course, Nigel is joining us from the newsroom floor. So, Nigel, you wearing pants or shorts?
Semi-ready for the weekend.
It's not the weekend, guys. We have another day of work tomorrow.
Yeah.
So
I was sitting inside one of the rooms and I saw shoes that only Nigel will wear and and legs walking past. I said, well, that has got... Of course.
He's giving too much away, I tell you. Let's get back to the market, guys. Prashant, let's discuss the bank Nifty. I think, we'll come back to more sane ground.
Nigel just pulling a leg, yeah.
No
All
worries.
right. Just take a look at the market, right? I mean, so we got a bounce on our hands, and it's what, 150, 160 odd points is what we have. And I mean, it's a decent bounce. The only thing is that after the opening itself was very strong. The follow-through is kind of missing. It started 120, 130 points higher, and we're right there with that much in terms of gain. So, can't complain, but would have liked to see a little more. The high today is 21,670, and that was about 30 points short of the first level which we put out in the morning, which is the 50% retracement of the two-day fall. From the all-time high to the low yesterday. The 50% retracement is 21,705, never got there. And that remains the first test of whether this market has got, strength and whether, we can go past it or this rally fizzles out somewhere here. And it's similar kind of price action on the Nifty Bank, strong start, but no real follow-through. The day's high on the Nifty Bank is 46,430. And that sort of retracement, because the fall in the Nifty Bank was much larger, and it's much weaker. It's not the 50%, but the 38% retracement is 46,529 on the Nifty Bank. 1% gain on both mid-caps and small-cap indices. PSUs are seeing a massive rally. The index is up some 2.5%, and it's looking pretty good. I mean, absolutely crazy action, and we'll get to that. That's the focus here, and Hormuz will join in with data, etc. Big results. There's HUL today, and of course, there's ICICI and Kotak, which will report tomorrow. So that's how we are set up. And of course, tomorrow is working. So
Tomorrow
for
is
a few.
Well, HDFC Bank's price action is a bit disappointing. After 2 days of big losses, today there was hope of a rebound. In fact, the stock opened up in the green with a gain of 1.5%. But look at the slide. From the top of the trading session, HDFC Bank is down 2.5% and now down 0.8%. This week, HDFC Bank is down in excess of 10%. And that's the reason why this intraday fall in HDFC Bank profit booking is the reason why the Nifty Bank is also absolutely flat. And the Nifty Bank has a cut of 4% for this week. Midcaps, by the way, are likely to go home this week with a gain of close to about 0.3%. But really, it's these railway stocks in particular which take your breath away. Mind-boggling. RVNL is up 17%. IRFC, Aircon, Titagarh Rail. These are stocks which have gone up 200, 300% in the last 1 year, and there is absolutely no stopping them.
Oh, absolutely. It's a breathtaking railway run, PSU run that continues. But, the sort of point of contention really is banks, not just HDFC Bank, because what's happened is even after IndusInd's numbers, it's very early into the banking earnings season, but the fact is that the market has got itself sort of wound up a little bit. Because on IndusInd it was about the rising, and that's what it's choosing to focus on, not the fact that all the numbers were in line, but the fact that slippages went up, and that's telling us about how the market's looking at banks with a microscope. HDFC Bank, of course, is well documented. And Nigel, I guess that's what I'm thinking as we're coming towards the end of this longish week, considering tomorrow is working. Because if the market is to indeed sustain the up move, if the Nifty is to get back to its earlier glory, the all-time high levels, then something will have to keep making up for the banks. Now, it was IT for a bit. Is it going to be some other sector? But we'll need, another heavy hitter to come in, because banks seem to be in a bit of a funk right now.
Well, I'm moving from cricket to movies, actually, Surabhi, because, a movie is a hit when the star actor or the big weight in there does well. And if HDFC Bank is not going to perform, this Nifty movie cannot be a hit. So we'll have to see the Bank Nifty actually participate at some point of time. And it's been underperforming. The largest weight in there as well is close to 10 rupees away from the 52-week low. So HDFC Bank at some point of time trades at less than 13 times its forward earnings. After the earnings have been cut a little bit, last I checked, the EPS estimates were around 97 rupees for HDFC Bank. You throw in there 250 rupee value to all the subsidies that it has. So you're getting the stock at around 12.5 times odd. So, at some point of time this needs to stop, but can it perform? The Nifty Bank today clearly is underperforming. I heard a lot of commentary early this morning when Hindustan Bank could have been the, one of those outperformers today because the NIMs didn't compress. But that's down close to around 3%. That's telling you the way the markets are looking at the banking names as of now. We'll need to see a bright spot. I don't know whether the banking names that are coming out tomorrow can do that, provide some kind of a bright spot. Because otherwise, it's getting a little bit worrying. We were nearly 49,000 odd. Now we're around 45,500. So let's hope that this, this sees some kind of an end, at least in the near term. But let's move on, talk about the markets, right? How do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, the market's holding with a gain, mind you, of around 150 points. But the star performer in there, HDFC Bank, is dragging, and it's pulling the Nifty Bank down with it. Your view on both these two indices?
Good afternoon, Nigel. So I think two things. One, HDFC Bank obviously, and it enjoys a significant weightage post the merger in both the indices, the Bank Nifty and the Nifty. This obviously is obviously a cause of concern, but also is the fact that the Nifty, which opened with gap down on those on that day of HDFC Bank numbers, which is Wednesday, that gap till it's captured. I think any chance of an up move or making a fresh high, I would eradicate. So my sense is that we will, even if we get a good pullback, and pullbacks will tend to be choppy. Then also, I think, the pullback will see a lot of supply around this 21,750, 800 zone, and then right up to the gap level of 22,000. So I think getting past and making a new high, I think in the short term, I would rule it out. So next couple of days, which is about 5 to 7 to 8 trading sessions, could be broadly range between 21,300 to 22,000. 21,800 actually, but 22,000 as the max limit is what I think can be done. The worry will come in case we start breaking below 21,300. Then I think we are looking at a reversal side. So let's hope that next few days could be spent in this choppy consolidation. Even if you see bouts of buying and selling during an intraday basis, I think it's important that we don't break below 21,300. If that can be held, then I think the market should be able to recover after a few days of this choppy consolidation.
Okay, Mitesh, good afternoon. Let's get to the stocks as well now.
Yeah, good afternoon, Surabhi. Mahindra and Mahindra is reversing from bearish pattern, and I think has given a very strong trading signal on the upside. So that's a buy with a stop at 1630. Look at targets of roughly around 1790 here. And ONGC, that's a buy as well. Keep a stop below 235. Look for targets of 255.
Thank you very much for that. Now back to the big story. PSUs are seeing a mind-boggling fantastic rally. Hormus joins in with the details, the kind of up move that we've seen over the last 1 year. Hormus.
You know, I was just speaking about IRFC a few minutes earlier, and instead of IRFC, I guess the other PSUs also don't want to feel left out. So even they are seeing a stellar move in today's trading session. So what has happened is, now here we go. RVNL, IRFC, IRCON, HUDCO, REC, PFC, SJVN. These are the 7 stocks. What's common in all of them? Over the last 12 months, all of them have tripled in value. Now, that is the kind of move that we have seen in these PSUs, and RVNL is leading the pack today. It's almost 17% higher. The market cap of IRFC today crossed 2 lakh crore rupees, and as a result of which, that is now more valuable than almost 40% of the Nifty 50 constituents. Now, how much does the government own in this? But before I get to that, now the stock like IREDA also, the stock is now at around 130, or nowhere else you would see a stock within 40 days of listing 4x from its IPO price. That's IREDA for you. Now, how much does the government own in all of them? IRFC, they still have around 86% stake there. SJVN, they still have around 81% stake. So you need to be careful in all of these names because the float in the market is very less, and as a result of which the move on either side can be extreme, whether it be upside or downside. They still own around 72% in RVNL, around 50% each in REC and PFC, which is now, even then, it's around 60 to 75,000 crore rupees, the entire government stake. The stake that they have in IRFC is now almost 2 lakh crore rupees. And as a result of which, the PSU index as a whole, that is now up around 6% in the month of January. It was carrying on from where it left off in November and December. For both those months of 2023, the index was up around 15% each. And the current market cap of the overall PSU market cap is close to 60 lakh crore rupees, which is an addition of almost 25 lakh crore rupees since the start of 2023. Well, PSUs were the theme of the year in 2023, and looks like they're just carrying on from where they left off the last time around.
Hormuz, I remember in a previous link, and correct, I don't know if maybe I'm mistaken, you looked at float, free float as well for some of these names, etc. I don't know if you have that ready with you, but some of them have pretty low floats as well.
Yeah, that's exactly what I mentioned. In companies like IRFC and in SJVN, they still own around more than 80% stake. The earlier ones were relating to PSU banks, where some of the PSU banks where the government still owns more than 90% shareholding, and which is why someone needs to be careful while they invest in these names, because the move on either side, whether it be an upside move or a downside move, can be extreme. Even in IREDA, the stock, there is enough float because the government is compliant with minimum shareholding norms, but still it's only 25% float in the market compared to other PSU names.
Okay, thank you very much for that. Prakash Diwan is with us on the show. Prakash, you know, these are companies which are growing well, the order book is swelling, but you know, it's just hard to make sense of the kind of valuations. How would you approach any of these PSUs? You know, now soon we'll have more details on the railway budget. The last railway budget was good. The government had outlined a total spend of 2.4 lakh crore, and that's when it fueled this big rally in railway companies. But you know, looking ahead, you know, weigh in on this PSU mad rally that we've seen.
So I think you know, the catch-up, the bigger part of the catch-up is already done, Rima. So you know, if you really ask me in one word, if I had to sum it up, it would be, how do I approach it? With a lot of caution. So it's as simple as that. You've seen the kind of order book, you know, getting priced into most of the stocks, whether it is BHEL, some of the railway stocks. But you know, this happens when you have a sector which kind of transforms completely into a very new animal. You know, so that's what's happened. But there are companies within the PSU ownership basket where you would have a lot of private sector participation going forward in terms of capex, and you know, the first name that comes to my mind is Gas Authority of India. You know, given the hydrogen push, the kind of logistics that will be developed around it, so you'll have to cherry pick now. It's not like a broad brush kind of a rally that you can rely upon. So yes, I would definitely not be looking at some of these which have swelled to 5x, 6x. You know, IRFC and all of that. Look at where the book value is. They're far more expensive than some of the banks. So you know, you definitely have to be a bit cautious, but there are opportunities which probably will emerge in the areas where the private sector also has some sort of a participation coming in with PSU ownerships.
Okay, got that. Prakash, hi, good afternoon and happy Friday to you. Not much of a happy Friday if you're looking at bank stocks, right? And therefore, the question now that, you know, you could have perhaps shrugged it off and said it was an HDFC Bank issue and the market will move on. But just look at the reaction to Hindustan Bank. Numbers were fine. I mean, NII, NIM, nothing wrong there. But the market has chosen to focus squarely on the one negative in the number, which is the rise in slippages. And that's telling you about, how the market is interpreting these things. And then you can couple it, if you're a bear, you'll say, look at what the RBI governor told us yesterday, Mr. Shireen, that rate cuts are not happening anytime soon. So how would you look at the big banks in this context? And then in a bit, we'll get to the expectations from ICICI and Kotak as well.
No, so that's a very important area, Surbhi, that you touched upon. But let me also draw your attention to a statement from the RBI governor in the same interview with Shireen that said the CD ratio is not a specific number carved in stone that we are looking at. It's more of the fact that he's just explained that deposits haven't grown as much as credit has grown. So it's more, he's alluding to a directional view in terms of, where things are headed. But he's not very specifically talked about some ratio which we need to get upset about. And, HDFC Bank actually had that whole overhang in terms of, just because the liquidity ratio, the CD ratios were not looking as per what market thought is going to get prescribed. So I think it's a little bit of an overdone reaction. If you look at Indices numbers, there's a very clear indication that in the zest to grow credit, which was what was lacking a couple of quarters back, there could have been slippages that have started accruing. And banks really need to be very cautious about repeating the same mistakes which we've just got out of after so many years. So I think the market is also looking at how management from most of these larger banks, particularly the private sector, are trying to weigh in the balance between growth and slippages. So that's what everybody will look at. Same goes for ICICI and from that perspective, I think Kotak probably stands out a bit better because you won't have a slippage issue there. They've been able to calibrate their growth in a very, very favorable way of sorts. So I would believe we will see a little bit of standout stuff from Kotak, maybe some from Axis, but otherwise, by and large, this is the area that most people are concerned.
All right, Prakash, let's talk about cement then, and I want to know what you have to say about this. UltraTech Cement, it went into its numbers a little bit subdued because the volume growth wasn't as much as what the street was working with. But if you look at the top line, the EBITDA performance and the profitability, well, it's bang in line, a little better actually than what the street was working with. So no negative surprise came out there. The volume growth we already had, that came out high by close to 5.5%. Some on the street wanted them to come in at around 8 to 9% and maybe outgrow what the industry has done. So assuming that 5.5% is what the industry did, well, they grew as much. But the realizations came in higher by close to 2%. That was what the street was working with, 2 to 3% on a sequential as well as on a year-on-year basis. The reason that the EBITDA number looks a little bit better is because energy cost, which is 33% of their total mix, out there on a per ton basis, you had a decline of close to around 16% year-on-year. And the absolute number, power and fuel cost, was down close to around 14%. So you have a volume growth of close to around 5.5%, and you have power and fuel costs in absolute terms that are down by close to around 14%. And that's the reason why these numbers look better. The blended fuel consumption, well, the last quarter was around $162 per ton. On a year-on-year basis, it compares with around $200 per ton. But this time around, it's at around $150 per ton. So there's a $12 reduction on a sequential basis. And that's positive, and that's a read-through for the industry as well. The industry believes that maybe, in fact, we'll see it with other companies as well. That's why you saw other companies as well spike up. The debt number moves up, but that's par for the course, given the kind of capex that they have had. Prakash, have laid down all the numbers on the table. What's your view on UltraTech Cement, and would you think that the street is right in seeing this as a read-through for the industry, or do you think UltraTech, well, they are a class above everyone else? They have their green power moving up, you have alternate fuel as well moving up. So you'll be a little bit circumspect to have this as a read-through for the industry.
So, Nigel, I think you laid out the numbers so beautifully and so exhaustively, to be honest. What I pick up from these numbers is simple, that players like UltraTech, which are not just a class but a scale apart, absolutely are not comparable to the other smaller mid-sized names. And what's happened is UltraTech has for years kept investing into the distribution strength. Now they're actually investing into the manufacturing side and scaling themselves up very rapidly. So they'll go through a little bit of transition, which will skew the metrics slightly favorably because of the scale. But if you look at the opportunity in cement with fuel costs, power costs going down, it's going to be the localized regional plays which are going to do better. And from that perspective, you go smaller into the value chain and you pick some smaller names, some mid-sized names, that will happen. I mean, I keep on talking about Dalmia Bharat being a very balanced kind of a play with manufacturing being so efficient and, of course, distribution also being so efficient. So my sense is you'll probably see smaller and mid-sized players doing much better. But all of the cement names, Nigel, to be honest, are from an EV EBITDA multiple are fairly priced. So there's not much of headroom. You'll probably start looking at buying them once some sort of a bump up in pricing or some kind of volume growth happens, which is much more secular for the next few quarters. At this point, I think most of them are fully priced, but you could look at the ones that haven't done too well in terms of, let's say, take a Grazim because of its indirect play. You could take up Dalmia Bharat, as I said. You'll have to be a bit picky, but Ultratech, I would not buy into it at this level. As I said, the multiples are fairly stretched. Irrespective of whatever improvement they've shown on the efficiencies.
Prakash, do you track Linde India? Used to be one of those names which just went berserk and then had a bit of a sideways action for the last many weeks. 8% move today.
So, Prashant, I do track, but I don't know if you ask me what has led to this 8%. I'm sure the news will follow. But what's very interesting about this space is that Linde and Inox, the newly listed Inox, business, these are the only two promising businesses which will see a huge rub-off and positivity come through on the hydrogen business as it comes. So their ability to supply containers of all sorts to this particular new sector industry is going to be phenomenal. So I think Linde scores from that, but the listed Linde that you have, remember, is not the one that does a lot of the gas business. This is more EPC work. So probably they are seeing some order booking which is accelerated in the recent weeks, and that's where it could probably start getting captured into the price.
Okay, all right, got that. Prakash, thank you very much for being with us today. You have a good weekend, and we look forward to connecting next week. Well, we'll take a break on that note, but as we take a break, here are some important, updates coming in on tomorrow's session. The National Stock Exchange as well as the Bombay Stock Exchange will hold a special live trading session tomorrow to switch to the disaster recovery site. There will be two sessions, the first from 9:15 a.m. to 10 a.m. and the second from 11:30 a.m. to 12:30 p.m. Switching to the disaster recovery site is typically done to ensure business continuity in the event of a major disruption or failure on the primary site. It ensures continuity and minimizes downtime in the face of unforeseen events. With that, let's take a break and we'll come right back.
Okay, welcome back. The market's up 150 points. 21,600 is where we are at. I mean, the Nifty is doing well, but the problem is the banks, and it's basically not looking good. Bank Nifty is now absolutely flat from all those gains given back. Ronak Onkar is co-fund manager of equity and head of research at PPFA's mutual fund. Ronak, good afternoon. Good to have you with us here. Prashant this side. Just talk to us about the big one there, which is HDFC Bank, and whether there is a compelling reason to buy it, to your mind.
Hi, Prashant. Thanks for having me. HDFC Bank, if you compare it over a little bit of longer period, say pre-COVID, the valuations are where they are. The business has been doing okay. And especially when the merger has happened recently, the numbers are a little skewed right now. I think we should give a matter of a year or so for the numbers to normalize and the merger to take effect, and all the integration happens very smoothly over a period of time. And then we will see the real challenge where most of the companies, the banks compete with each other for the same consumer credit growth or corporate credit growth, or even the other business areas, the fee-based areas where they compete with, even that can generate something to the earnings. So over a period of time, I think the bank itself is placed very optimistically. If you see the longer term, that it has a branch network, it has a good deposit base, it has a good brand name which people are associating with and want to partner with over a long period of time. So it's nothing that we are looking at as a different from a business point of view. The only thing is the merger might skew the numbers in the short term.
No, so it's all relative, right? I mean, you have so many choices. So in that sense, as a fund manager, would you pick this one over everything else right now, given the fall, or no?
We already have as the largest position in our portfolio as HDFC Bank. So
okay, if you were to do it again at this price,
yeah,
you would, right?
Yes, we would.
Okay, all right.
What about Hindustan Bank? The numbers were not bad. You can see, yeah, slippages were on the higher side, but 3.5% gone on Hindustan.
So what we have done in the banking portfolio that we own HDFC Bank, ICICI Bank, Axis Bank, and even Kotak Bank. So we are comfortable owning the top 4 banks whose consumer franchises are a little better than most of the other private sector banks. I'm not saying the businesses are fundamentally different. It's the same business, but these businesses have been built with a different DNA over a long period of time. So we would like to partner with these banks in the portfolio.
Okay, so that is the take on banks. Let me ask you about the other newsmaker of the last week or so, Ronak, afternoon. And that is IT, and you do have some, frontline technology in your portfolios. I think you have Wipro and Infosys, if I'm not mistaken. Not sure how long back you bought these stocks. How long have you been holding them? And what is the prognosis? Are you on the side that believes that things are bottoming out?
So I'm not too cyclical about it. If you look at a strategic location of the sector, IT services business does one of the most important things for enterprise clients is help them adopt new technologies that are out there. And also the technology is used for increasing efficiency in their businesses. So over a long period of time, we have seen that. So whenever new technology comes, IT services companies are there as vendors who will help the adoption of technology. So for the long story of IT industry, that does not change. So as long as these companies keep evolving and understanding new technologies and helping their clients, that narrative or that theme does not change. What is interesting is over a long period of time, we have also seen IT services companies have been phenomenal cash generating businesses. They have good ROCs, they have good margins, and they have also shown growth across different geographies. So they have an ability to sell these services across the world and also at a lower cost as compared to some of the other companies. In fact, the global competitors of IT services companies from India, these companies have been setting up their employee base in India to replicate the same model. So in a way, Indian IT services are pioneers in providing services globally and competing at neck to neck with some of the global competitors. Now, the only choice remains is whether we are comfortable with the valuation and the growth and where it will come from over a long period of time. That is very uncertain to know. So we will not know where the growth will come from, but because they're exposed to several verticals, maybe banking, financial services, or retailing, manufacturing, or even communication. So they are exposed to a variety of verticals. So I think the growth comes from all over these places over a period of time. So the growth will balance itself out in the longer run. But the cash flow generating profile of the business, the great profitability these companies have, and even the structural requirement of an IT services business is very important as a characteristic. Now the only thing to do is the valuations. So if the valuations are comfortable, we have been holding them for a while. If they become uncomfortable, we can sell them. So in the past, we have had to exit from companies like Persistent and Emphasis because the valuations had gone too high.
Okay, all right. Hi, Ronak. Good afternoon. Nigel on this side. Ronak, talking about IT, I'm not sure, but I think Oracle was one stock that you added, right? In the last, between, I think, October to December. And it is the first time, I believe, you'll added it, you'll increase the weight in 2.5 years. Is that correct?
Yes, that's correct.
You must be feeling so good about it. Imagine that underperformer suddenly performs and you'll got the timing right. So, good on that and congratulations on that front. Now, I'm looking through, the additions that you'll made in December. IGL is a stock that people are a little bit wary about, in terms of this entire move to EV and will it cap the kind of, conversions we've seen from petrol to CNG. What's your view on that? I believe that is another addition that you'll have made in the last, in the last release. Is that correct?
Yes, Nigel. So in energy transition from one fuel source to the other, I think the long-term narrative is very clear that we are going towards more green solutions in terms of fueling our vehicles. But the interim period is where the real action is, where you know that it might take a long time to transition. It might take a longer time for vehicles to adopt. It might take longer time for customers to adopt. It will also take a longer time for the charging infrastructure to come up. So whatever goals you see people are setting up, these are 10, 15, 30-year goals in terms of fuel transitioning from fossil fuels to electrification. So I think in that interim period, you still need to have gas. You still need to use oil and gas and other fossil fuels that we have been used to. So that transition is going to be slow. It's not going to be like a light switch. Suddenly, when we decide we have to switch, we will move to the other fuel source. So in the interim, if the business is good, if the economics of the business remain the same, and they also have the ability to do pumped gas at the same time, even piped gas at home, I think it's a compelling thing. The cash flows will continue till the transition actually happens. And it's a long runway. So we'll keep evaluating at every point in time when the results come to see if our thesis plays out or not.
IEX, I think you'll own IEX. We had chatted about it last time, but now the Power Minister, the stock has been under pressure. Market coupling is going to happen. How are you reading this development for the stock, which you own in your portfolio?
So yeah, at the same answer I gave last time, right? So one thing is network effects, where we will track as to how other exchanges are coping up. And the second thing is the longer term volume of power traded on the exchanges, which is something that is very positive for any exchange that comes up in the market competing with IEX. So one thing is, as the volumes grow, as we transition more towards renewable resources of electricity, you will need such kind of a mechanism to do short-term trading of power. So yeah, in the longer term, the narrative remains positive for that industry of power exchanges. It remains to be seen how it affects this one company. So we keep tracking it. We keep a very close eye, understand what the numbers are, what people are suggesting. But we'll only act when we are sure that the numbers are deteriorating for the good.
Okay, sounds perfectly sensible. All right, Ronak, thank you very much for joining us and giving us some perspective on the kind of stocks that you own. Have a great weekend, and we look forward to the next conversation. Well, the Nifty is still holding on to a gain of about 150 points, but the biggest question ahead for the market is what are these big blue chip banks going to do after a disappointment from HDFC Bank and Indices? Not really a disappointment, but just the way the markets read it. What about ICICI Bank and the next one, Kotak? We have Abhishek joining in. All eyes on these stocks now, Abhishek. So let's go through the expectations.
Well, to begin with, ICICI Bank, lowest NII growth on a YY basis in 21 quarters is what analysts are making in terms of our poll, and PAT estimated to decline on a sequential basis. So as per Kotak Securities, loan growth is estimated at 18.5% YY and about 4.9% sequentially. Provisions can rise on a sequential basis as per Kotak Securities estimate. Now, slippages may rise quarter on quarter, but watch out for the slippages wherein they are coming from. Either they are coming from known stress portfolio or either they are fresh slippages. So Morgan Stanley estimates a slippage of 5,250 crore, which compares with about 4,687 crore in the previous quarter. Asset quality largely expected to remain stable. Motilal Oswal expects gross NPA ratio of 2.5% when compared to 2.48% in the previous previous quarter. And commentary with respect to loan growth and deposit growth going ahead from the management will be crucial. Two key numbers to watch out for: watch list, which is at 4,790 crores, and restructured book 3,536 crores. How they behave and how they move will be seen closely. Our polls suggest an ag growth of just 12.2% YOY and about 0.9% sequentially. We are working with a profit growth of more than 20% YOY and about 2.5% decline on a sequential basis. For Kotak Mahindra Bank, Street is anticipating lowest NII growth and PAT growth YOY in last 8 to 9 quarters. So the key thing to watch will be the loan growth. Now that is expected to remain strong. Motilal Oswal expects a loan growth of 16.5% YOY and about 4% sequentially. Motilal Oswal again estimates a deposit growth of 20.5% YOY and about 3.5% sequentially. So the net interest margin can remain stable. Morgan Stanley estimates net interest margin to remain flat on a sequential basis. You need to watch out for the low-cost deposit momentum that's on a declining trend for the entire industry. Last quarter, Kotak Bank's CASA ratio was around 48.3%. So asset quality expected to improve. Motilal Oswal expects gross NPA ratio to decline to 1.63% versus 1.72% in the previous quarter. Management commentary and outlook will be important to see. On a standalone poll, we expect NII growth of 13.7% YOY and about 2% sequentially. We are working with a profit growth of 13.2% YOY and a decline of 0.9% sequentially. Back to you.
A quick follow-up, Abhishek. You mentioned slippages. The expectation is that for ICICI Bank also slippages will rise and that will become an important watch point.
That's a marginal rise. Not
a marginal rise.
Yeah, 5,250 crore is what Morgan Stanley is estimating versus around 4,690 crore in the previous quarter. So about 500, 600 crore. That's a marginal rise, not much of a rise.
Okay, got that. Thank you very much, Abhishek, for joining in and giving us a heads up on those two important bank earnings. We'll take a break on that note. Okay, before we take the break, I think we have Nimesh with us. So let's quickly go across to him and figure out what the buzz is like in dealing rooms today. Extended trading working week, Nimesh. What's the mood in the dealing rooms?
Well, Surabhi, good that there is a bit of a recovery in today's market. But again, after the gap up, we've not seen a follow-up buying or follow-up extension as well, for at least in the large cap names. That's overall feedback. Even in terms of flows, the sense is, the FIs are still better sellers, especially in the banking names. But again, there's going to be a small marketed close basket buying at a leading FI. So maybe you'll see some, some stocks. It's a larger basket, so not only specific to Nifty, but to the broader markets as well. So you'll see some movement from that perspective. Again, the sector seems to be the PSUs. Massive rally in the PSU stocks. Again, in today's trade, the OMCs are rallying, buzzing in trade. So is the case with the rail PSUs, the power PSUs. Every stock in that PSU basket seems to be in a different zone altogether. So that's where the big momentum seems to be. A word on the financials. While you've seen some bit of recovery in the financial names as well, but again, from a flow perspective, the feedback is the outflows from the larger FIs in the financial names continue. Even in terms of sentiment from the larger HNIs, the feedback is they're turning a bit cautious on the financial names. So financial stands out on the negative side, but it's the PSU basket which continues to outperform, and that's the trend today as well.
Okay, all right, Nimesh. What about individual stocks? What are you picking up?
Well, so in terms of individual names, Nigel, the first stock on my list is Orient Paper. In a market like this, that stock has rallied 13% and large volumes as well. I understand some bit of HNI activity is again back in that particular stock. And the street is anticipating some corporate development as well. So that's the first name. The second stock is IGL. Within the gas basket, this is one stock which has relatively underperformed, but some bit of traction seems to be back now. Even in today's trade, there are buy flows at FIDs, is what I understand. And also, Citi had put out a tactical buy note on IGL, and they believe that the pessimism is overdone as far as IGL is concerned. So that's the second name. The third stock is Godfrey Philippe. While there is a lot of chatter towards ITC, GQG buying out, for that matter, even VSTs where Radhakishan Damani added further into VST as well. But Godfrey Philippe is one stock where it's not a very liquid stock, so there are small amount of accumulation happening from large institutions in Godfrey Philippe as well. Relatively, it's cheaper compared to the other two names, so that probably explains a bit of interest there as well. And the last is GSFC. Again, part of the PSU basket, big move in that stock as well in today's trade. And I understand in GSFC, some domestic mutual funds are active buyers.
Nimesh, you had put out IOC and BPCL as part of your chatter yesterday, right? Stocks are up 3-4%.
In fact, the kind of flows which have been suggested for BPCL and IOC in yesterday, there were massive volumes, massive delivery-based buying from the larger institutions. It didn't react yesterday. The stocks were flat, but today we're seeing a big up move in both these stocks. In fact, again, as I said, I've been saying this for so many days now. The PSU basket is where there is massive interest, not only from institutional investors but from the retail investors as well. So that explains a big move in the OMC stocks today. And there was a big report as well from Morgan Stanley explaining why the OMCs are still very cheap and can outperform from here.
Okay, all right. Nimesh, we'll leave it there. Thank you very much for that. So that's D Street Chatter with Nimesh as always, and we'll keep an eye out on some of these names, and you should too, as we take that quick commercial break here. So we'll do that. The market's up 150 odd points or so, but it's just one leg, which is the Nifty, which is performing. The Bank Nifty is not. We'll come back. We'll get you buy and sell short-term trading ideas, BTST trades on the other side. Stay with us.
Welcome back. Well, it is all eyes on Ayodhya over the next several days. The Ram Temple consecration ceremony is now just 2 days away, and the ritual started inside the complex will continue till the 21st of January. The idol of Lord Ram has been placed inside the sanctum of the temple. Security has been beefed up across Ayodhya ahead of the big event on the 22nd. CNN News 18's Shivani Gupta gets us this report on the security arrangements and the facelift in and around the temple premises.
Just 2 days to go for the major Pran Pratishthan ceremony on January 22 at the new Ram Temple. I'm standing here at the entry of Hanuman Gadi, one of the main important spots. Everyone who comes for a darshan at the Ram Lalla Temple first goes to Hanuman Gadi. And right now on the streets, there are actually more police personnel and RAF personnel than even ordinary citizens that are visible. You can see that there is a whole unit of the RAF right next to me. And this is the main spot where a lot of the entry has now been barred for unregistered vehicles or vehicles that do not have prior permission. This is the route that the chief ministers, the dignitaries, and of course the prime ministers are going to be using. I want to show on the other side of the road, we also have a female RAF unit that is present. And this is that road that has been refurbished as well. You see on the other side, a lot of these shops have been given a very consistent facade. This is part of the upliftment that has been done as far as the entire Ayodhya region is concerned. A lot of the shops here, in fact, all the shops here in this 2-kilometer long road now have the same consistent facade to give this entire area a facelift. Of course, ahead from here where a checkpoint has been formed is the Hanuman Gadi. From there is the Ram Janmabhoomi temple as well. And a lot of security arrangements have now been done to ensure that there is no untoward movement that is allowed anymore. Lots of vehicles we've seen that are no longer being allowed inside. Of course, people are being allowed inside because regular darshans are still going on. And of course, a lot of the public lives here as well. But other than that, certainly as we get closer, 48 hours, 24 hours to go for that January 22 ceremony, not much is going to be allowed in that 1-2 kilometer radius from the Ram Janmabhoomi temple. With camera person Nitin in Ayodhya, Shivani Gupta, CNN News 18.
It's all happening at Ayodhya. In fact, Abhimanyu Sharma is also now joining in for details on the preparations and the directives issued by the government for the 22nd of January.
Well, celebrations and preparations are underway across the country for the consecration of the Ram Temple on the 22nd of January in Ayodhya. Prime Minister Narendra Modi would be a part of the consecration, for which he's also observing an 11-day long fast, which involves several restrictions on lifestyle and diet. Meanwhile, several states as well as the union government has issued several advisories. All central government offices as well as public sector banks will remain closed till 2:30 p.m. On the 22nd of January when the consecration ceremony is going to take place. 11,000 people from across the world have been invited by the Temple Trust for the Ram Lalla Pran Pratishthan ceremony. Also, as many as 6 states till now have issued advisories for public holidays, as well as they have declared dry days and have banned the sale of meat and fish at several places. Namely, these states are Uttar Pradesh, Madhya Pradesh, Goa, Chhattisgarh, Haryana and Tripura. It remains to be seen whether other states are also going to follow suit. For now, private sector banks are slated to remain open on the 22nd of January since there is no formal notification which has come out about their closure.
Well, indeed, we're all looking forward to that big event. But let's get back to the markets for now before we wind down. Mitesh Thakkar is back with us. Mitesh, what do you make of today's trading session? We're still holding with a gain of around 150 points. The Nifty Bank is unmoved. But if you're making money and you bought that dip that we saw last couple of days, would you book out or would you carry that long position?
So, Nigel, I think, a good idea. And see, this still looks like a pullback to me. But I believe that we have, some more space on the upside. So therefore, I think I would suggest now trailing the stop loss to about 21,550 on this spot and holding on to long positions. Hoping that, this pullback will extend to 21,750, 800. Beyond that, it's looking difficult for me, at least for me to understand the movement immediately. But I think that, with some volatility, we can head towards those levels. So trail your stop losses. The other thing is that on the BTST side, Ultratech Cement is something which has come on the radar. It's a BTST with a stop below 10,000 for targets of 10,300. And the other stock which I like is Trent. That's a BTST as well with a stop at 31.95 for targets of 32.50.
Thank you very much for that. Moving on to Mangalam now. HUL will be reporting numbers in just a while from now. Mangalam joins in with the key expectations. Mangalam.
Well, the board meeting is underway, so results should be out in about 30 minutes from now. The stock has been flat in the last 12 months. The street does not expect too much from HUL this time around, and as a result of which it's been a bit of an underperformer in the sector itself. Why is that? Because, well, there has been no material pickup in the festive demand. Rural demand is still slower than urban, and the company's premium segment will do better than the mass end, and management commentary amidst all of this will, as a result of which, be very crucial too. What are you expecting? 2 to 3% volume growth, 1 to 2% price erosion. The company has taken price cuts in a lot of their portfolio parts. 400 to 450 basis points gross margin expansion, but all of that will be plowed back into ad spends, and we're expecting around 350 to 400 bips increase in ad spends as well. Revenues of almost, largely flat, 1% jump is what we're expecting, 15,385 crores. The EBITDA gains a little higher than the revenue, so 4.5% gain is what we're expecting there, with margins around the 24%, and the net profit up by 6%. Home care business will see about 0 to 1% sort of revenue growth. Beauty and personal care anywhere between 1 to 2 odd percent. Food and refreshments too will see about a 1% growth, largely because of inflation that we've seen in coffee, down trading in tea, and the fact that Horlicks is still not selling as much as the company would have liked to.
All right, Mangalam, thanks very much for that. So that's Lever, which should be out with earnings in a little bit from now, a little later actually, post-market close. Well, in this week's edition of Market Cafe, Surabhi caught up with veteran investor Vijay Kedia. Vijay does not want to buy PSU stocks anymore. But what would he rather buy? Listen in to a small piece of that interview.
This whole PSU rally, nobody could have thought. I think if I had asked in 2021 to any of our experts saying, PSU stocks, 9 out of 10 experts would have said that no, government has no business to be in business. PSU stocks kuch keh nahi sakte. And for good reason, because, that's how that cycle played out. What do you think about this now, and what would you advise people to do in this PSU space?
That's what I'm saying about airlines. Now, people have a different opinion. When things started playing out, then they changed their opinion.
Yeah.
So ultimately, these PSUs and all this defense and all this, they are going to remain there. And that boom is going to remain there for next 10, 15, 20 years. Should be. Okay. Of course, I feel that stocks are expensive. But let me tell you, I thought this 3 months back also, these stocks are expensive. But last 10 miles, they can double or triple or whatever it can happen. So don't think about expensive or not expensive. You won't get answer to this. If you feel that you are not comfortable with this kind of valuation, you should sell your stock and buy something else, and regret. As I always say, that stock market is a place to regret. You buy shares, you sell early, you regret. You buy, sell, you don't sell, stock price comes down, you regret. You buy shares, you don't buy, and stock price goes up, you regret. So that regret is a lifestyle disease of investing. You have to live with this. Enjoy this.
But you feel that this pocket is expensive now, so you wouldn't put money here. Is that right?
Yes, I wouldn't put my money. Okay. So maybe I'm wrong. It's okay.
That's all right.
Doesn't matter. As it is, I'm not keeping my money below the pillow. Okay, it is invested somewhere else. तो ये नहीं चलेगा, तो तुम नहीं होगी तो और होगा, और नहीं होगी तो कोई और होगी. क्या है इसके अंदर?
तो बताइए कोई और कौन है? That's my question. What is capturing your imagination now in terms of something that you're finding interesting, trends, something that, again, looking at the future?
No, as I said that I'm invested in, my portfolio is very much diversified based on Indian economy, Indian consumption and domestic theory and all. So I'm still invested. So holding is also an investment, Not every time. Where would I get money to invest every time? People call me, आज क्या लेने का? एक बताओ, 10 दिन बाद फोन करते, अभी और क्या लेने का? तो पहले क्या किया भाई? Why do you want to open a pan ka shop? Do you want to have 200 kinds of stock? Concentrate on 20 stocks, 15 stocks. That is enough for you. So.
Okay, that's the advice from Vijay Kedia. Have a concentrated holding of good stocks, and PSUs is in a void for him right now, given the high valuations. As we slip into a very short break, here is a quick important reminder about tomorrow's market. The National Stock Exchange and BSE will be holding a special live trading session tomorrow to switch to the disaster recovery side. There will be 2 sessions. The first one, 9:15 to 10 a.m. The second one, 11:30 a.m. to 12:30 p.m. Switching to the disaster recovery side is typically done to ensure business continuity in the event of a major disruption or failure on the primary side. It ensures continuity, minimizes downtime in the face of unforeseen events. With that, we'll get into a break. We'll come back in about 8 minutes left for markets to close.
Okay, welcome back. The market doing okay, about 175 points, which means the Nifty's actually added on a little bit more from the time that we took that break. I just want to pull up Z. Z is sharply sold off in the last, I think, couple of minutes of trade. Yes, it has. So 3 p.m., the stock was at about 240. It's lost 10 rupees since that point. So there you go. That's what I'm talking about. Last 2 days it did rally, and there have been reports that there's a Sony, which is Sony board meet today to sort of contemplate on the merger. So it's a bit of a binary kind of an event, and for now the market is nervous. So 230 on Z, and there's sharp selling. Anand Tandon is with us. Anand, good afternoon. Great to have you with us here as always. Weigh in on Z. I mean, to begin with, the merger will happen or it will not happen, or maybe there's another extension. There are 2 more extensions, by the way, which the agreement allows them to do. So maybe we'll actually get an extension announcement at some point. What's your sense?
Well, it's difficult to think about what the board of Sony, etc., will determine. There is no question that the merger economically made sense, right? So the basic case for having a larger a joint company was fairly strong, and that has not changed. Now, whether or not they can get the management out and therefore find themselves more comfortable going through with the merger, or will they break it off on the basis that they can't get the change in management that they apparently want to have, is something that you can't really speculate on. I would argue that by itself, Z will be a lot weaker company, and therefore it would be in the interest of the of Z itself also to go ahead with the merger and make whatever adjustments are necessary. By and large, it's a probability game. At this stage, I think I would still bet on the merger going through.
Have you looked at Oracle Financial Services? Yesterday up 20%. It's followed it up with another 5.5% up move.
I don't have any additional information beyond what is there in the market. The problem with this kind of company is that it has a product pipeline which rolls over slowly. And if you look at the kind of long-term growth that this company has done, it is consistent but not eye-popping, in the sense that there is a seemingly gradual increase in bottom line and top line, but it is not something which is even keeping up with the rather tepid IT businesses that we are seeing even today. So it's maybe there is some additional information which I don't have, but no, it's not something that I would be tracking very closely. Undoubtedly, it is cheaper than many of the other small cap companies which seem to be reaching at stratospheric valuations. But other than that, I have
Anand, finally, just before we sign out, railways, any word of advice for investors out there looking at these gravity-defying moves?
Well, I think, like Mr. Kedia said on your program a while ago, if you are comfortable with it, stay with it. My bet always has been that you should be looking to get into stocks when they are cheap and when they're not very much like with the market. The returns obviously fall off if you keep on assuming that there will be tremendous growth every time going forward. There are always hiccups. But that said, given the state of the market we are in, it is likely to fall on deaf ears. So, if you're comfortable holding on to it, be with it. I don't personally think that there is a case to be made for investing in this.
Okay, all right. Anand, we'll leave it there. Short chat, thank you very much for joining us. It's time for us to wrap up the market. And I'll just quickly take a look at exactly that pack. I mean, what else, right? Look at RVNL, which is up 20. Just a few names. IRFC, which is up 10. IRCON, which is up 11%. Hoodco is up 15%. IREDA is up 10%. NBCC is up 8%. Railtel is up 6.5%. REC is up 7%. GIC-RE is up 16%. That's the reinsurer. RITES is up about 6.5%. Texmaco Rail is up 8%. My God, what a move. New India Assurance, by the way, is up 10%. So these are massive moves after already very strong gains on all these names actually over the last 1 year. The Nifty PSC index is up another 3% at an all-time high. So just incredible to see what's going on in this space.
Well, that's the PSU space. On the rest of the market, it was a fine day for practically most parts of it except banks. The Nifty is going home with a gain of about 170 odd points. And a lot of the larger PSUs like ONGC, NTPC, Coal India, they were right at the top of the league charts here as well. Bharti Airtel had a great session, 3.5% up on Bharti Airtel. And Titan and Britannia are some of the names from the consumer space that stand out. Throw in an ITC as well when we're talking consumer. The problem for the market is banks. Hindustan Bank has ended the session with a cut of 3.25%. Kotak Mahindra Bank down 1%. HDFC Bank losing more ground, down another 1%. So it's going to be really all about the big bank earnings over the weekend tomorrow. That's ICICI and Kotak. Very flat for the bank Nifty, but the Nifty managed to move higher, almost 1% up. So ending with a pullback. Well, with that, we are out of time on this edition of Closing Bell. Thank you very much for watching, but do stay tuned. Our Friday special Smart Money coming up.